again, our goal here is to try to help educate our audience on what's happening in cannabis. This is sort of a blended, as you could tell by the polls that we did, a blended audience from different industries. And so one of the things that we want to talk about is what's happening in cannabis. What sort of consumer trends are we seeing in terms of what they're purchasing? And we were very lucky to connect with Headset Incorporated, who is a data analytics company who's tracking consumer purchasing behavior in real time at the point of purchase. And we've got Cy Scott, who I'm going to bring up here in just a second, who's the CEO of Headset Incorporated. I just want to remind everybody to switch rooms, okay, for these questions. All right, we're in the sales and consumer trends. But please join me in welcoming Cy Scott to the podium to take over.
I'm going to have to get Corey's marketing team's number to work on my presentation. That was pretty good. All right. So yeah, my name is Cy Scott. I'm the CEO and co-founder of Headset. As George said, we're a data analytics company focused on the cannabis industry. What I want to talk about today is sales and consumer trends in the space. I know that there's some data that was shown there, and it seems like data seems to resonate with the audience. So really excited. I've got a lot of fun bar charts for you today that I'll walk through what that's all about. But really the narrative is about this industry with a lot of opportunity, a lot of change, a lot of growth, but a lot of upside. So it's still all relatively new, but there's a lot of good trends that are starting to emerge, and I'm happy to be able to share that with the audience today. So, cannabis has gone mainstream, and I really think that that's highlighted by, Corey and the Francis Ford Coppola's wineries jumping in as a good example of that. He even mentioned that, 20 years ago, he wouldn't have thought that he'd be standing on a stage talking about wine and weed, but here we are. So it really has gone a long way in just a few short years. And we see some massive adoption happening both in the US with new markets coming online, but also internationally. In markets like Canada, we have full federal legalization. And you're starting to see some good adoption of medical markets in Europe and South America and other areas of the world that then will eventually adopt adult use cannabis, much like the California model. And that really begs the question, what exactly is working in the cannabis industry? And people are trying everything. People are throwing a lot of different product ideas at the wall to see what's going to stick. Different formats here. I've got flower and beverages, tinctures, pre-rolls, edibles, and concentrates, just kind of to highlight the vast variety of product types that are out there. So it's not one format. A lot of people historically thought of cannabis as just the dried flower product, but it's come a long way. And everyone's trying to build a new brand, a brand that'll last for the decades to come. So it really is the biggest question out there. And the answer is all in the data. It's not that different than other verticals. The wine industry, looking at metrics to understand trends and what's going on. Same thing has to be said for cannabis. It used to be, just a few short years ago, you could produce a product, you could get it on the store shelves, and it would most likely sell pretty well. But in adult use markets that we track, things are getting very competitive. Shelf space is getting limited. Retailers are getting pickier about who they work with and the types of products that they want to carry. So looking at the data can really help drive those informed decisions so you don't spend a lot of money on production processes or branding, marketing on a product that might not sell as well as you would think it would. And that's where we come in with Headset. We're real-time retail-derived analytics, and all of our data starts with retailers. So we work with the retailers, connecting into their point of sale. We give them great analytics back around not only their own stores data, but also what's going on in the market. And then in turn, we aggregate and anonymize that to paint a picture of what's going on in the space. So this is just to kind of give you some background on where our data is coming from. So we work with hundreds of retailers in a variety of adult use markets, as well as some medical at this point in time. And it really all does start with retail. We think that retail is the best indicator of the industry and data and where it's all going, especially because it's really where people are putting their dollars. What are they spending it on? And the way we work with the retailers gives us a lot of good information that we can get out. So we get, not only the sales and the transactional information, but we get wholesale pricing or inventory levels or sales staff trends. And one really interesting aspect of the data is we get great demographics and behavioral data from loyalty programs. And we'll talk about kind of some of those trends on the consumer side. But you can think of it as a giant panel with the loyalty data. It's almost 1 million different individuals in that panel with close to 10 average number of transactions per year. So it's a good set of data that gives us a good read on who this consumer is, and I'll talk through that in a second. And lastly, we also work with Nielsen. I know some Nielsen data was presented. Nielsen is doing a lot on the CBD side. There's a lot of interest happening in CBD, and I'll touch on some of that. And we can kind of combine some of our CBD data that we get out of the adult use retailers as well and paint a really nice holistic picture of the market. And so now I'm going to really dive into some of the trends in the cannabis space. There's a lot of slides, a lot of data here. It might be tough to read in the back of the room. I will make all this available. I think the audience can reach out to either myself or the event coordinators to kind of get access to this, so you don't have to take a lot of photos. But feel free to do so if you'd like. So let's start with just a high-level overview of the industry. We track multiple markets right now, but we've got a good full-year read on 2018 here in California, Colorado, Nevada, and Washington. So I just want to highlight some numbers here. California being the newest market, you'll see that it did about $1.3 billion in sales last year, but it had a compound monthly growth rate of 6.9%, which is massive. We see, this interesting trend happening, pretty common, where it's kind of like an S curve, where, the market will open up, licenses will slowly trickle out, processors will start producing products, and, sales are a bit slow to start, and it's a bit rocky around the edges, and then really starts ramping up. So we're kind of in that ramp mode in California, I would say. We see similar patterns happening in markets like Canada. Others like Colorado and Washington, which we consider more mature markets since they've been online since about 2014, have a bit lower on the compound monthly growth rates, but still pretty good. When we look at 2019 year to date, so through July, California still has some good growth rates at about 5.2%, although it's not reflected here on this slide. But really, when we look at those markets, California is the biggest opportunity. And again, this is 2018 numbers, so you can see, or through 2018, I should say, you can see that California is just really this massive ramp. Right now, in this slide, it ends December 2018. It's about $150 million in monthly adult use or recreational cannabis sales for California. Now, as of July, end of month July, it's about $215 million in sales. So it continues to climb. So if this chart was projected out, you'd see that purple line shooting through the top there. Other markets like Washington, Colorado, obviously had some good growth and still growing, but not at that rate of or that pace that you see in California. A lot of it has to do with just size of the market and population, much like Nevada there on the bottom. And it's getting very competitive out there. There's a lot of brands. In a headset, we track hundreds of thousands of SKUs and hundreds of brands out there in a variety of markets. But roughly 20% of the sales are going to the top 5 brands right now. And a lot of that has to do with a few different factors. I would say distribution being one of the biggest, so having a good footprint. So if you're in a market like California, you're able to get your product all over the state, you're going to do pretty well. Consistency, price point, potency of the products seems to be a lot of consumers are looking at, potency and dollar amount. We hope that will change over time as people get more educated about the market and realize that it's not just high THC, but it does seem to drive quite a bit of sales. But you can see that it is getting very competitive when you have 5 brands taking close to 20% of the market. And then when we look across the industry, as I highlighted earlier, there are a variety of different formats of products. So it's not just flower, things like beverage, capsules, concentrates, and so on. And those new formats are gaining more and more market share. And you can see that green bar there in the middle is flower sales. So flower sales continue to grow. The dollar sales continues to grow when we look across all the markets. But you're seeing things like vapor pens really come into their own, driving a lot of sales. And vapor pens are particularly popular in California. A lot of it has to do with technology. When a market like Washington opened up in 2014, there were vapor pens on the market, but they're pretty far and few between. And then, technology catches up, consumers kind of learn about different form factors and start to purchase those types of products. So we expect to see this continue to grow, whether it's vapor pens or edibles or beverages. Those numbers will continue to climb as far as total dollar sales. So it's quite a diverse set of products that are out there, and consumers are purchasing all different types of products. And at the same time, flower is losing market share pretty quickly. So when we look at percentage of market, flower is down to just over 45% at this point at the end of 2018, where it starts at about 80%. And it's that same kind of narrative where when a market opens up, it's relatively straightforward to produce a flower product. It's a product you grow, you cure, you package, and you put on the store shelves, where something like an edible or vapor pen requires a bit more investment on the processing side and production side. So it does take a little bit of time to come into market. But now you're seeing just a broader array of those types of products being sold and taking away the market share from things like flour. And a lot of this is driven by legislation. So that's one interesting thing in this space, is that legislation is pretty strict, and it varies market to market. And if you're a license holder in a market like Colorado, it may be challenging to be a license holder in a market like Washington or California. A lot of different brands are looking at opportunities around licensing instead of actually having their own processing license to do production themselves because of things like that. But when we look across the percentages here, you can see a market like flour, roughly 40%, and then you've got close to 80% in a market like Canada. And Canada legalized back in October of last year. So, going on about a year pretty soon here, but it's still very limited on the format. So you can only sell flour, pre-roll, capsules, and oil-based products right now. They've taken a very limited view on the market. They really want to slow it down somewhat. They've got to balance consumer health as well as getting rid of the black market. So they thought, go out the door with flowers and then slowly open it up to other formats. And that stuff will be coming down the line, probably December or early next year. You're going to start to see things like vapor pens or edibles come to market, and we'll start to see the shifting market share look more like the U.S. That said, there also is some limitations on things like package sizing in Canada. So when they do have edibles, you're limited to 10 milligram package size. Where in the U.S., depending on the market, that you can pretty much have like 100 milligram package size, but 10 milligram single serving. So you'll see people have 10 milligram servings in one package, where in Canada it'll have to be 10 different packages. So that may skew the numbers a little bit. But it does impact businesses. So if you're going to market and you're making a plan how to get to Canada, and you have a product in California, that may impact what that product looks like when you go to market, just because of different legislation. So to kind of touch on some of the demographics, what's pretty interesting, we look at 2015 here, and it was very millennial driven. So millennials are very much early adopters. Cannabis had been relatively normalized for them growing up. Maybe they may or may have not gone through things like the DARE program or just seeing legalization. So they come in at 70% there in 2015. And then you fast forward to today, and you see them losing a bit of market share. And it's really coming in from the Generation Z. So about 5% of sales in 2019 so far have gone to Generation Z. And it's really like 2 to 3 years of individuals because of the age. So 21, 22, 23-year-olds, depending on how you define Generation Z. So just a few years of individuals purchasing now 5% of cannabis products. And at the same time, you're seeing growth coming from the older demographics. So the Generation X, the baby boomers, and the silent generation, the elderly. So this really comes from more normalization, more acceptance, more access. And again, kind of goes to this whole idea that cannabis is going mainstream. It's not just for a younger audience anymore. People are looking at it from a wellness perspective as well as recreational. And they have different purchasing patterns, as you can imagine. The Generation Z or post-millennials really seem to gravitate towards high-potency products, things like concentrates. Those are very high THC-derived products. but also less expensive products like single pack pre-rolls, stuff that's a bit cheaper. They seem to resonate with a Generation Z type audience. When we look at Generation X, a large percentage of sales going to vapor pens, so they like the convenience of things like that. And then as you move up to baby boomers and silent generation, you see more adoption of the tinctures, sublinguals, topicals, capsules. So that kind of leads us to believe that it's more around the wellness opportunities, health benefits that you may be able to find from cannabis. And different age groups have different spends, as you can imagine. A lot of this is driven by price point. So when we look at average item price for products like capsules or tinctures, they're a bit more expensive. I'll talk about that in the context of CBD shortly here. But the baby boomers, silent generation, spending a bit more per transaction than someone like a Generation Z or post-millennial who's buying those single-serving pre-rolls. So CBD seems to be everywhere right now. I've noticed that at the grocery store, you see those special issue magazines that cover, you used to see them all the time, or you still do, around cannabis and the cannabis opportunity. Now I'm starting to see those for just CBD specifically. CBD is interesting because it does overlap a bit between kind of our world at Headset, which is the adult use recreational market, and some more mainstream outlets. You're starting to see CBD-based products sold, at places like Walgreens, and so on, and we'll continue to see that trend. So it is gaining popularity, especially in the non-inhalable formats. So things like beverages, capsules, edibles, tinctures, sublinguals, and topicals. You do see it in flower. The high CBD flower is where all of this started, but you're seeing it being extracted and included in these types of products. So some good growth in 2018 in the tinctures and sublinguals and topicals. And we're looking at percentage of total products featuring CBD. So something like beverages, at the end of last year, about 20% of all products that were beverages included some sort of CBD ratio. And that may vary depending on the product. Another reason why CBD may be gaining popularity is it's a lot better margins for the producers. Products are much more expensive in the market. Something like tinctures and sublinguals, almost 2x the price if it includes CBD versus something without CBD. So good opportunity for businesses to increase their margins. Margins are relatively good in cannabis, but there are challenges around taxation with 280E and so on. So looking for healthier margins is something that most operators are doing. So kind of one byproduct of this nice trend of adoption on CBD is that you could potentially make a bit more money as long as you're focused on some of these areas. Not all of them are 2x. You'll see things like tincture sublinguals are 2x, but things like capsules about 1.5 times the price point. So that's kind of a high-level overview. There's a lot in there. There's a lot to review, but I thought what we could do, given that it's a wine and weed symposium, is kind of look at the beverage category opportunity. Beverages are a very exciting market. I'm sure this audience has a lot of experience with the beverage industry. It's still, relatively small, and I'll get into that in a second, but, growing. So, here looking at a sampling of California beverage products, we classify a lot of different beverages. So you have things from, the mocktails, which are like, wine or de-alkalized wine, like the Rebel Coast, I'm sure many of you are familiar with. You have things like sparkling water that's infused with THC. You have stuff like Two Roots and other beer companies that are really looking at producing a beer tasting product, but without alcohol and just with THC substituted, and then ciders and everything in between. So this is, just a handful of, hundreds of different products that are out there, and that's really highlighting, California specifically. So beverage market share, at its peak back in 2018, we had about almost 1.5% there. It is continuing to grow, but it's still relatively small. Some factors go into this. There's not a lot of beverage manufacturers out there. It's really a small pool compared to other products. So it could be just a supply-driven economy where, given that there's limited supply, limited access, sales aren't there. Another nuance with beverages is that the format is a bit challenging at times with like 100 milligram package sizes, right? If you have a glass of 100 milligrams of cannabis and you drink the whole thing, you might not be in for a good time, depending on tolerance. And so you're seeing a lot of different brands experimenting with that, putting measuring caps on the top, and you kind of have to pour it out like children's Advil or something. which isn't the best consumer experience, you know, if you're at a dinner party and you're pouring little bits out. But probably a better alternative than drinking the whole thing. And so, you know, that's some challenges, but you're seeing, you know, people moving more towards, you know, 10 milligrams and less as single servings, so you can have, you know, 1 or 2 drinks and be able to function. So it is kind of a unique space in that capacity. When we look at beverage sales by segment, so the subcategory underneath beverages, we classify it into things like carbonated beverages, drops, mixes, elixirs, and syrup, iced tea, lemonade, mocktails, other, and tea. We're looking at 2018 to 2019. Probably the biggest surprise or the biggest gain is coming from mocktails. So mocktails are the wine-like products or the beer-like products. So we're seeing more and more of that coming to market. So some nice growth there, and I'll talk about what that looks like across different states next. But also, you know, carbonated. There's some good growth in carbonated. Carbonated has the highest amount of flavor profiles out there. So a good selection of products that we're seeing in the market that are carbonated beverages. When we look at this across different markets, you can see it's wildly different. So that last slide we were looking at 2018 to 2019, you can see how, you know, there were some trends, you know, mocktail growth and so on. But when we compare different markets like Washington to California, you know, Washington basically has no mocktail products. And a lot of this just has to do with the product manufacturers that are in certain markets may not overlap with other states. And so again, supply-driven economy, consumers are only purchasing what they're able to be purchasing, and mocktails are just not available in Washington. You'll see in Washington, it really skews heavily towards carbonated. A lot of times when a market opens up, there's some copycat behavior. You know, you see carbonated beverage on the market, you see it doing well, so you come in with your own carbonated beverage to try and compete, take some market share, and potentially differentiate yourself. And so it starts to create, you know, more and more carbonated beverages coming to market. But what I would say, you know, if you're in California, you're thinking about California, I mean, obviously these numbers are important to the market today, but I would look at other markets and look and see what's resonating in those other spaces and what can you bring to the California market, for example, that you know, a consumer just may not have access to. It's, you know, in Colorado, for example, a huge percentage is going to things like drops and mixes, so you kind of put that in your own drink. But that's something that's, you know, very underrepresented in a market like California. But doesn't mean that there's not an opportunity. You know, a California consumer is probably going to be very similar to a Colorado consumer. So, you know, it's worth experimenting or looking into, you know, opportunities outside of your own market and seeing how you can bring that to the market that you're in. When we look at Beverage Basket, so we see, you know, transactions, not a lot of sales are going to, or not a lot of baskets include beverages. Roughly 2% of baskets contain at least one beverage in 2019 so far. So pretty small, and that's where you get that, you know, 1.5% market share. But when they are purchasing a beverage, they're also purchasing a lot of other product types as well. So 42% of that basket is going to beverages, and then the rest, 58%, is going to other categories of products. So this is pretty compelling because a lot of people talk about, you know, cannabis as a competition for alcohol, which in many ways it is. And I think, you know, there's a talk later today on kind of impact on the wine industry around how cannabis is impacting wine. And it definitely, there is some overlap, but it's also worth remembering that cannabis kind of competes with itself as well. So if you're producing a beverage and someone else is producing a pre-roll, that may get thrown in with your product, or people are making decisions around, you know, not just choosing a beverage. So that's pretty interesting to understand, and I think, you know, it's validated by, you know, what Coppola is doing with flower. Coppola is a wine brand, people associate it with wine, yet they're producing a flower product. So there's opportunity there to just, you know, think that you make a beverage now in the alcohol space. Doesn't mean you have to do a beverage. You definitely can do a beverage and encourage more and more companies to do beverages, but also look at other opportunities outside of the beverage category to kind of offset and so the consumer can purchase, you know, just a suite of your products at checkout. This was actually pretty topical as well. Not that it's beverage alcohol, but you might have seen the headline yesterday about Arizona iced tea. They made an investment, I believe, in Dixie Elixirs, which is originally a beverage manufacturer out of Colorado, one of the early beverage manufacturers back in the medical days. But in the press release, Arizona is going to produce things beyond beverages, or they're going to license their brand for things like vapor pens, things like edibles. So it's pretty interesting to see that they're taking that approach, that not just focus on beverage, but leveraging that brand into other categories. Flavor preference varies. Again, this also is very much derived by just different operators, different products available. Colorado, you'll see flavorless products. There's a brand out there called Ripple that does really well, where you're mixing it in drinks, but it is flavorless. You see that's not represented anywhere else in the markets that we're tracking right now. Washington, it's pretty funny. You see a lot of fruit flavors, lemon, lime, or orange, apple, but no fruit punch, which is funny. So maybe there's an opportunity for a fruit punch product to come. As you can see in Nevada, fruit punch does pretty well. So pretty interesting to kind of look at the different flavor profiles. We've worked with Nielsen on some of this to see if there's overlap in consumption patterns coming from other non-alcohol or non-cannabis based products. And it's really, there's not much overlap, and again, it's supply driven. So we kind of have what we have in the different markets, and people are purchasing what's available. When we look at average item price by segment, what's pretty interesting is that Nevada seems to have the highest price across the different segments. So you have the carbonated iced tea, lemonade, and fruit. Nevada really has high price point. But then on the flip side of that, when you look at mocktails, they're the cheapest. And that is really driven by low potency mocktails. So stuff that's 0 to 5 milligrams or maybe up to 10 milligrams. Really single serving mocktails. And when you can think about a Nevada audience, it makes quite a bit of sense, right? People are traveling to Las Vegas or elsewhere in Nevada and want to consume maybe one beverage at a low price point. So mocktails for Nevada, the price point or average item price is actually pretty low. But mocktails drives quite a bit of Nevada's sales. I think it was 14% of the dollars spent in Nevada on beverages goes to mocktails. So even though it's lower price, people are purchasing a lot of it. And then we have sales by package size. This is looking specifically at California. So some good growth coming from the 10 milligram and below. So a lot of sales going to those single serving products. And it kind of goes back to that, the 100 milligrams can be challenging, or anything outside of 10, unless it can come in like a multi-pack, can be challenging for a consumer to purchase and consume. There's a brand in Colorado, Syria, that is Keith Villa from Blue Moon. He's making some beer-based products. And I believe he has 2 products in market. One that is like a lager that's about 3 milligrams, so like a lighter drink. And then he has an IPA, which is about 10 milligrams. So kind of trying to take that equation, which is similar in beer, where you have lower proof lagers or pilsners, and then you've got higher proof IPAs, but bringing that model to cannabis. So we are seeing a lot of growth in that 10 milligrams and below. And then things are starting to normalize with just kind of 10 milligrams and 100 milligrams. Some of like the 30 milligram numbers, kind of odd numbers are going away. And then CBD products. So again, CBD products are very top of mind right now for a lot of people. You can see on beverages, a lot of growth on CBD, although somewhat of a decline right now. When we look at these numbers, you're close to 30% back in 2018 of sales going to CBD products. But if you remember on a previous slide on beverages, about 20% of the SKU allocation is for products with CBD. So they're actually over-indexed a little bit, where more people are purchasing CBD products than CBD products are available from a SKU perspective. So that's good. So even though it looks like a little bit of a decline, they're still pretty popular. And then edibles continues to grow, just for some, to balance that and to show you some context. But edibles still has a long way to go to reach what beverages has as far as percentage of sales going to CBD products. So that's a lot of information. We can go on and on and on about all this stuff. And the big question is, how do you use it? Where do you go from here? So, a couple things. When you're looking to find opportunity, definitely look to outside markets. Pay attention to the market you're in, but look to outside markets and see what's available. What kind of brands are resonating with consumers? Again, a lot of these consumers are very similar. Someone in Colorado, again, not very different than someone in Washington. So is there opportunity to bring products to market or to create a product that emulates something that's doing well in other markets as an opportunity? Look at demographic trends, marketing kind of 101, who's your audience? Understand if you're going after an older generation, they might be able to spend a little bit more. They might be gravitating more towards CBD-based products versus the younger millennial audience that might want cheap mocktails that are, 10 milligrams, as they like the higher potency stuff. Purchase patterns, so again, looking at the transaction is important. What's in that basket? So when someone buys a product, whether it's a beverage or some other category of product, what else are they purchasing with it? And what kind of opportunities are there for you to create a product that might be complementary that then they can add to their basket? And then CBD growth, really around the margins, really around kind of this momentum that CBD seems to be happening right now, both in the adult use cannabis space as well as more mainstream outlets. And then on the risk side, it's good to remember that, alcohol and cannabis are beverage competition. So just because you're in the cannabis industry, you're also competing with a variety of formats that are in the cannabis industry. So it's worth looking at opportunity from that perspective to produce products that, are beverages, but also other formats. Brand building in those alternative segments. So looking at the opportunities like what Arizona Iced Tea is doing right now by producing edibles and vapor pens later on in the year. And then really just paying attention to new entrants to the market. So who's coming to market? How's that changing the dynamics of sales? It does matter given that it's so supply driven right now. Paying attention to what's happening is critical to really mitigate any of that risk as you have your products out there in the market. So that's it. Happy to answer any questions if we have time. And obviously the slides will be available for you because there's a lot of data that hopefully is valuable for the audience here.
Thank you, Si.
Thanks.
And to Si's point, we will be making all of the presentations available, but we only have time for a couple quick questions. Sure. And someone had asked a question about for some of the, let me get it right here, but for some of the non-beverage edible cannabis firms that are struggling to differentiate themselves, what do you have to recommend to them so that they don't wind up just being a commodity?
Yeah, it's challenging. One of the things that is really difficult about the space is marketing. Not that unlike alcohol, but I feel like a bit more restrictive than what you get in alcohol. So it can be hard to differentiate in that perspective. I think what we see seems to work is having a good relationship with your retail channels and working with the sales staff. We see a lot of brands go out there and do like demo days, training up the sales team, and then the sales team at the retailer, acts on your behalf, right? If they like your product and they can kind of back your product because they know more about your product, then they'll push that product more. So that's a good way to kind of differentiate is by connecting to that sales staff of those bud tenders, as the industry calls them.
Not unlike the wine industry and
probably very similar.
Well, thank you, Si, again for being here with us. And we've got a short break here, so take a 15-minute break, and then we'll see everyone back in here for our next session.
Great.
Thanks, bud.